What's up, everybody? It's Thursday, May 13th. Masks are off. Masks are off. CDC issues new guidelines. Americans that have been fully vaccinated, they don't need to wear masks anymore in most places. So I'm free. All right. Let's talk about, we had a bounce in the stock market today. Folks, the sentiment AAII weekly survey, very interesting. Bullish sentiment is now negative compared to the historical average for the first time since October 2020. So we had a big dip in the bullish sentiment. The thing that stood out to me was the level of neutrals. A lot of people moved to the neutral camp. And so we need to get them off. I mean, they either have to jump into the bearish camp or they got to get back into the bullish camp. So all these neutrals, now that's kind of like gunpowder. That's like potential energy. I mean, they're going to go one way or another. I was thinking today that we could still see some more market declines, but look, we got commodity prices coming down today, another day. Lumber down, copper down, corn, wheat, soybeans, coffee, sugar, natural gas, crude. I mean, commodities were down. And this is not the first day. It's been happening for the past couple of days now. So I made that video a few days back. I said, commodity prices have peaked out, and also today we saw 10-year bond yields come down. And I'm going to talk about bond yields and interest rates in a minute. So I don't know. I mean, the neutrals could jump back into the bullish camp, but we know one thing. It's going to take them a long time in terms of if the market starts rebounding, they're not going to jump in right away. They're going to jump in after it has already moved a significant way higher. All right, let's talk about interest rates because, it's funny when you think about it because you've had this establishment of people for as long as I can remember. And I've been in this business as a trader, as an exchange member, going back over 40 years. And you've always heard this phrase, don't fight the Fed, right? I mean, everyone has heard that phrase. And this comes from the financial establishment. This comes from Wall Street. This comes from all these, financial gurus and know-it-alls. Don't fight the Fed. Don't fight the Fed. And this was taken as gospel, like, no matter what happens, whatever the Fed's doing, you can't fight that. You got to go with it. And in general, I mean, it's probably a wise idea, at least short term, because when everybody thinks a certain way, and if they view the Fed's actions, now I've spoken a lot about how monetary operations are really, really fundamentally misunderstood. Hang on, forgot to shut my phone off. Monetary operations are real. Hang on one second. Have my amplifier going. All right, monetary operations are really, really misunderstood by the vast majority of people, right? They don't understand that what rate setting is, that's price setting. They don't understand like quantitative easing, which is just an asset swap, and all they ever see in their mind is this printing money, right? That's all they ever see. So I mean, a lot of this don't fight the Fed really is behavior that's rooted in a lack of understanding of what the Fed does, what monetary operations are all about. But anyway, let's get off of that. This has been an establishment concept. Don't fight the Fed. Yet, what we have been seeing over the last months has been the complete opposite. Actually, it's pretty incredible to watch. Like, I'm standing there on the sidelines watching all this because I've been involved for 5 decades, and all I've ever heard was don't fight the Fed, and there's this crowd, and it's all these establishment people, it's all the financial big shots and Wall Street and the financial media who have been saying that for so long. They're the ones fighting the Fed. So here's the Fed saying time after time, we're not going to raise interest rates. We're not going to raise interest rates. And yet they keep selling treasuries. They keep fighting the Fed. So this belief, this view, which up until now has been adhered to religiously, suddenly they're throwing it away. And they're not, they cannot find it within themselves to follow the Fed anymore. So they're not following the Fed. So let me tell you something. Now, it may end up that the Fed changes its mind. And then I would come on here and I would say, look, interest rates are going up. If the Fed comes and Powell, and we've seen his behavior in the past, in December 2018 when the stock market was correcting, and we had already something like 8 rate hikes between 2015 and December 2018, and the market went into a correction. I think it was mainly at that time for fears over the trade war which Trump instigated with China. And then he backed off, and it was like, we're going to have to start cutting rates. He flipped. He got pressured into it by the market. So there is some history there about his behavior. We know this. Okay? But he's been saying, look, we're going to keep interest rates down. It's all about, he's been saying it's all about jobs. And they have been talking about inflation, but he says he wants to see the inflation rate above 2% for a period of time because it's been below 2% for a period of time. So he wants to see the average over a period of time will be 2%. He wants to let it run hot. He might flip, but the point I'm making is this. He is telling you, how many times have I said this business is easy because the policymakers, they tell you what they're going to do. I mean, your job basically is to sit around and wait for them to tell you what they're going to do. They told us they're going to do this massive stimulus last year, and again late last year, and again this year. They told you that. And if you understand MMT, if you understand the impact of fiscal expansion, that's bullish. They told you that. And here he's telling you we're not raising rates. But yet this establishment, which, like I said, has followed this rule religiously, don't fight the Fed. They're fighting the Fed. Now, let me make one more point. All right? It's about inflation and interest rates. For a country that is a monopolist in its own currency, like the United States, where the Fed is a monopolist rate setter, it sets the interest rate. All right? It doesn't matter. Inflation could be 1,000%. If the Fed wanted the entire term structure to be 0, it could maintain that forever. So it's not about any operational ability, or being forced. Let me say this. It's not about being forced at all into raising interest rates. The Fed couldn't give whatever. If inflation went to 1,000%, if it wanted to keep rates at 0, it could keep rates at 0, not just the overnight rate, but all along the term structure if it wanted to. Okay? So that's not even an argument. That's not even a point. The only thing to consider is what I said before. Will he flip? Will the Fed say, okay, you know what? we can't take this anymore. I think it's a little bit too much. We think it's a little bit too much. We're going to raise rates. In that case, then everything changes. Then you will see, we go above 2% on the interest rate on the 10-year, and who knows how. Depends if they keep raising. If then they say we're going to raise and we're going to raise again, it just keeps going up. But right now they're telling you they're not raising rates. So you have to be long the Treasury market. Because as long as they keep it steady, rates along the curve will gravitate towards the policy rate. All right? Simple as that, folks. Simple as that. All right, that's it for today. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. And see everybody tomorrow. I'm leaving in 2 days for my trip to the Grand Canyon. It's going to be exciting. Bye.